Hello traders, Nick Shaheen here. Today is a great day. It's 127. What a day. Oh my gosh. So if you're an active trader, or at least a fan of the market, you're watching what's going on with the GME and the likes. Um, some incredible things that have never happened before. Before I delve into Palantir, by the way, you have to mention this stuff because it's just incredible. So I watch options. I watch tickers. I man the chat room with over 250 people every day open. Link down below. Free to try it out. Not free to be in there. It's a lot of work, but totally worth it. But anyway, so GME, I shorted it by buying puts. I went long with debit call spread for this week. I couldn't profit from it. That's how violent it was. The implied volatility spiked to like 600% on the first day this week. Whenever it spiked crazy, I had a winning debit call spread completely in the money in my favor. I couldn't get out of it, so I opened the order to close it. It wasn't filling. I even gave up some of the money. It wasn't filling, so I hit cancel, and then I came back to it, and the order was gone. So somehow E-Trade decided to take it away from me. I still was green, but only by a fraction of what it would have been because I made the right call. Regardless, I bought naked puts for March at $30 naked put. Paid $4 and some change. Today, when the stock was exploding higher, my puts were gaining in value, which should never happen. So if you look at the options chain, both put buyers and call buyers were making money. The call buyers were making more money, but the put buyers were making like 40, 50, 60%. So that $4 whatever turned into $7 or $7.50. I can't remember what it was. My puts gained in value. So very strange behavior going on in the market. Sidebar conversation to Palantir. Now Palantir exploded higher, whether from that or not. I think they had a demo day that was very positive. So in my last video, if you watched it, a lot of you watched it, I said a burst is coming. I think that was the headline of the video. And in the beginning, I said how I like this company. It's new to me, but I like it because it seems legitimate with a nice product in two different directions, commercial and government. And then I said it's not like some of the SPACs that have hope of a product down the line. These are actually doing it now. So I said I don't know which way it's going to blow up, but I will buy the dip if it comes. And here are the lines I would buy at. I had two. I said if it breaks out from that line, I showed the line, I would chase the rip. So I said buy the dip or buy the rip, meaning the burst is coming. And at the end of the video, I showed this kind of a chart, and I said if I simplify things, I see a big burst, a nice consolidation, setting the stage up for another big burst. Look at this. Is this a perfect burst and burst? If you can make the eyeball this exactly the size of this. So we got that. Do I chase up here? Not from a trading perspective. Yes, it could go higher, but it will have to do it without me if I'm not long already. Because this is where the FOMO kicks in, and especially that I can justify it and explain it technically. Now, I know somebody's going to be upset by telling you that not to chase it up here. I'm not saying short the company. I'm saying it's not an obvious point of entry like it was down in this cluster. Down here, I was long call spreads. I was buying the dips by selling put spreads, which is a bullish bet. And everything worked out. The only thing that didn't work out is if somebody tried to do the right thing and sell covered calls, then they probably got called away or limited their upside potential, which is not a disaster. If you don't make X, you make X minus a little bit. That's not a problem to have. So what now? So this is the big picture. Long term, I like to own it. I think it's going higher. If the market is higher down in the future, then these guys are higher as well. Timing wise, I wouldn't pour all in right now. I wouldn't take a full size position right now. That is not an obvious point of entry. That doesn't mean it's shortable. I'm not dissing it. I started by saying I like the company. I also the last video, I gave you ideas that all paid that have nothing to do with Palantir. I told you I was short Goldman Sachs, and look how much that paid. I told you I would buy VIX calls because it's cheap insurance. You would have doubled your money if you did it yesterday. I don't know if I mentioned being long bonds, but that also played out well. So chock full of information that we go through every day. And there's a lot of homework that we do, a couple of write-ups a day, some trades here and there. So there's a lot to do. The one thing that's not obvious is to pile into Palantir right here. Trust me, I'm a fan. I'm saying I don't jump in. So let's get a little smarter. So this is 4-hour chart. It's, first of all, what the heck is this candle? And I'll pay attention to its lines. The top of it, the bottom of it, and the stomach of it. And look where the stomach is. Look left. Okay, so this is a doji-ish candle. What it is, if they open at a place, they love it, then they hate it, then they're not sure, they come back and they close it about where it opened. That's indecision. That's the market saying, I love it, no, I hate it, no, you know what, I don't know, let's just kick the can. They kicked the can, and the next day they decided, no, they love it. They had 2 more dojis up here. So now I have a pivot level. Somewhere in the middle of this big candle is some indecision. Somewhere at the bottom of the candle, there's going to be some buyers. At the top of the candle, there's going to be some sellers. So if you know your candlesticks, you can get smarter and look for imbalance in there or something based on the wicks, like every third candle or something like that. I'm not an expert at that. I'm just starting to dabble in that. But the concept is the same. Good companies, you buy on the dip, and you don't chase late. All right, so I think I would need to get shorter in time in order to get more information. This is that same candle. That doesn't give me a lot more information. Hey, Peter. Okay, so now you're starting to see this little consolidation jag. I think you'll find buyers as it approaches 34. Now, the market was down on this day. And it felt like panic, even though the scoreboard wasn't that bad. It was not good, but it wasn't that scary. But everybody was like starting to look to buy the dip. I was like, if you zoom out, we're still near all-time highs. And the QQQ finally filled its little gap down to 316. So yes, I could start to nibble, but I wouldn't go all in. So if it falls down to 34 now, I think it'll find buyers. I would feel much comfortable at 32, if not all the way to 29.5. Why am I picking this? It's the bottom of this candle. They're saying something leaving this much behind. So these are not scientific levels to many people. We go, oh, you're just picking levels out of the blue. I'm not. I have a good eye for levels, and I'm not a Wall Street guy. I learned this on my own. In fact, if you look left from here, watch. I didn't see that before I just zoomed out. It was a failing point. It was a failing area. They came back and they broke out from it. They tested it for footing and they went. So if they come back to it, I'd be selling put spreads in there. If I want to own shares, I'd be selling puts. If you don't know what that means, it's a great way of getting long a stock. I know people have told you, oh my gosh, using puts is so dangerous. But if I'm looking to buy shares right here, why would I not want to be paid to buy them lower? That's the idea of selling a put. So how does that work? I say, okay, I'm willing to buy the shares at 39. But wait, instead, because I don't have any buffer, as soon as it starts falling, I'm losing money. Why don't I sell a put at 26? I just made up a number. 26 is the point of control. We can explain that in a little bit. At 26. So I'm on the hook. As soon as I sell the put, if I sell one contract, I commit to buying 100 shares at 26 between now and the expiration date. The price can be anywhere, and I could wake up owning shares. Why would they give them to me up here? They'd be stupid, but they could. You could wake up owning it at 26, wherever the stock price is. If it's at 20, you already lost $6 per share, but not quite, because you collect money for selling that put. So if I sold the $26 put and I woke up owning shares and the stock had collapsed down to 20, then I'm down $6 a share minus what I collected. If I collected $3, then I'm only down $3 per share. So compare that disaster scenario with somebody that bought the shares right here. They'd already be down, what is that? What did I say, 20? They'd already be down 50%. And I'm barely down $3. So These are round numbers I just made up on the fly. I didn't choose a particular time frame where I'm willing to buy this so that it's not construed as an actionable trade. It's to illustrate the concept of selling a put. Works well only for somebody who is, one, willing, and two, able to buy the shares. Because for some reason, the broker will let you do that, even if you don't have enough money to cover it. And then one day the stock collapses. Stocks do, not particularly this one, but sometimes they do. And then you're stuck. The broker will call you, oh, you need to cover. What do you? Now you owe a crap ton of money, and that's how you blow up accounts. So if somebody does not want to own the share, it's probably smarter to sell a put spread to where, same concept, I don't need a rally to win. I just need the price not to collapse. And then if it does collapse, my maximum loss is set from the day I open it. Then I know, okay, I can make 12% on my risk, and my odds are 85% of success. But in case that 15% bites me, I can only lose 35 cents per contract. I just made up numbers again, but that's how it works. All right, so who's buying those puts when I sell them? Somebody that wants insurance. If somebody owns stock and wants to be out at 26, then they buy that insurance from me. So if I sold that contract, somebody on the other end says, thank you, now I can go sleep nice, comfortably, knowing that if it goes to zero, that Jack over there is on the hook for buying those shares from me. He promised at 26. So it's my obligation to seller. His or her obligation, the buyer of said put, not obligation, right to exercise that or not. I'll give you an example. I sold a put in US Steel last year when it was falling. So X, the letter X is the ticker, which by the way, I was short and I closed it today. Let me see if I go to a daily candle. Computer's slow today. Let's see here. Okay, so somewhere here it was falling. I sold a $9 July put for here. So I said, if it falls below 9, I'll buy your shares, and I collected $1 for it. At the time, I got nervous because I wasn't sure I wanted to own it, so I bought protection for April at $8. I figured the worst case scenario, I'll basically break even. And this happened. The stock fell to $4 and change. $4 and change. I said I'll buy it at 9. They never gave me the shares. So I'm like begging them to assign me the shares basically. Every morning I wake up, did they give them to me? No. Please, can you just give them to me so I can get out of the stinking trade? They didn't. And then literally the second day of, down here, I thought to myself, you know what? I paid 20 cents to buy this protection April put. It's now worth thousands of dollars. I'm going to sell my protection and let them give me the shares, and I'll deal with it. They never gave me the shares. It rallied all the way up to here. Somewhere in here, I bought back the puts I had sold for a little bit more than what I collected. But the money I made on the protection leg was massive compared to what I lost on this one. So it was overall a winning trade. Reason I'm mentioning this is the other side are not always that smart. And for some reason, somebody thought that, hey, a July put, I don't need to give them the shares. They loved their stock so much that it fell $5 below my mark at a $9 base, and they still didn't give it to me. Why the heck did they buy those puts? I have no idea. So it doesn't always make sense. Palantir is a good company. I would sell puts in it to own the shares. I don't have a problem with that. In X, I did have a problem with that because I had no idea what they were doing. So I was like, I don't want to own it, so let's protect. So caution. All right, so that's enough information on this one. 14 minutes. Holy cow, I wanted it to be shorter. Anyway, sorry about that. Later.